Hi, good morning, everyone. This is Brian Wagner. We're going to get started in a minute here. Just want to welcome everyone into the room today. All right, very good. All right, officially starting now. Good morning, everyone. My name is Brian Wagner. I'm the Chief Architect of Prodigio RTS. Thanks for joining me today, where we're going to talk about some features on the Prodigio trading platform. And today the subject of this topic, of this chat, is about trade optics and order entry and order execution. And I want to talk about a couple things related to getting fills, maximizing your fill prices as you place orders and work orders and put trades on. And I want to discuss conceptually the different kinds of things that you can be doing when kind of working the book to get favorable fills. I want to kind of point out the features in Prodigio that allow you to kind of maximize where your orders are triggering and firing at. And just talk a little bit in general about the way that the quotes are delivered to you and how you can take advantage of things such as level 2 views, such as the ones that we're building, in order to have rapid and favorable fills. So as always, we have this chat every Wednesday, 12 o'clock Eastern, 11 o'clock Central, and we usually focus on a different topic. Recently we've had the shadow traders on talking about various things. We had Tom Cook discussing some pairs trades and how you can automate a lot of that pairs trading in Prodigio. But join us here in the Prodigio chat every Wednesday at noon while you're sipping on some lattes and enjoying your lunch, and we can talk about some interesting things. In order to get Prodigio, request activation by sending in an email to support@thinkorswim.com with the subject line of Prodigio activation. Send them your username and they will get you set up immediately. You get a new icon on your TOS platform that lets you launch Prodigio. And what Prodigio is the automated trading system which is offered exclusively by Thinkorswim and TD Ameritrade. Prodigio features a number of trade idea generation and robotic trade automation features, and it allows you to create technical analysis-based strategies, a drag and drop interface, which we call Wizard Lab, and you can manage and deploy those strategies to get real-time signals and real-time trades, completely automated. So let's get started. I want to talk today about trade optics and order entry. And the philosophy behind Prodigio is that trade optics allows you to build some kind of rule or strategy or use some of the pre-built rules available in the system. And I can just open up a rule, for example. Any kind of rule is really going to work. Let me expand this here. So I have one such strategy, and I'm going to zoom out here. Wizard Lab, as many of you know already, allows you to drag and drop inputs and outputs together so you can define the logic of a strategy without having to actually program anything. And that's the huge benefit to Prodigio, is that it's a non-scripting based content generation system. The concept is that you create rules or you borrow rules built by other people or built by us, and you use these and you fire signals. And how you manage those signals is really what you're interested in. You can combine these signals together into a strategy. And so step 2 is the strategy builder. And in this strategy builder, all it is how do you combine scan signals with management signals. And for the purposes of today's chat, I'm going to focus on the trade optics, which it's a really, really valuable piece of content because it allows you to really take advantage of automated signal generation without committing yourself to robotically trading the entire account. So in other words, it's a zero risk system. You can get all of the signals to come into your trade optics queue based on Wizard Lab, based on the non-scripting Wizard Lab rule builder. And you can look at these signals and you can elect to put these positions on or elect to not put these positions on. You can get the signals, you can make observations about the market. If you want to create a system where it triggers when various conditions are happening, and these conditions only happen, say, once a month, you can set it up. You can have it running every day. You can have it scanning for these signals, and when that condition happens, you will get lots of alerts populated into your trade optics queue. And when these signals come in, they'll be populated from top down. By default, it's sorted descending by time. So all of your newest signals come in, and they'll come in from the top, and depending on the resolution of your strategy, you will get new signals based on how it's working. And there's a lot of tutorials, and there's a lot of these chats. We talk about how to build things in Wizard Lab, how to create strategies, ideas for strategies, etc. We try to kind of talk about these in the chats, and we're working, I think the expression is like the Dickens, like the Charles Dickens right now, on our latest and greatest build, which has a whole slew of new features that kind of tie into Wizard Lab, including the fundamental analysis, etc. So we're working extensively on that, which is why today's chat we want to focus mostly on order entry, because we've got some other components related to that coming in as well. But anyway, the idea is your TradeOptics queue is available to you where you can set up any kind of strategy, any kind of technical analysis. You can let it run, and through zero risk you can get the result set. And what we've done with Prodigio is we've hardwired everything together so that when you get a result, if you want to act on it immediately, you click the Trade Now button, it populates your Chart Trader Pro with the signal, and this Chart Trader Pro, it's wired and ready to kind of trade. So for example, if I pull this down, my order entry, my order management panel down here, it's already preloaded with the symbol V, which was the signal that came in. It's already kind of lit and ready to go. I'm ready to send a limit order to buy because I generated a long signal at the right now at 99.07, which is the ask. Right, so this, I'm going to kind of walk through how some of these features work, but this is tied to the ask price, so I can kind of lock that down or unlock it, and it'll follow. I just got a new update depending on the movement of the market. And I'm going to explain how you can kind of maximize your trading potential by using the tools in Prodigio, but also just thinking about the order book in general. So TradeOptics is one of the most important components of the system, as it provides all of these signals. We're not going to get into how you build these strategies, but one quick little shortcut that you can do is you can go into the blog on www.prodigiorts.net and check out some of those blog entries. You can go there, you can download some of those .wiz files, and those are strategies, and you can actually go into Wizard Lab, and in the strategy builder you can push the import button, and you can select the strategies that you downloaded, and when you import them they'll come right into your system, and you'll be able to check them off under the TradeOptics selection panel right away. And it's a simple matter of just picking your symbol list and selecting the strategy for deployment that goes up to our servers, and you're getting server-side scans producing the results in real time to your TradeOptics queue. So given that TradeOptics and Wizard Lab can be very powerful to your trading strategy, I want to talk about how you can use it to do actual trades. Now Prodigio monitors your account equity positions. And I've got the portfolio view up in front of me, which is really showing me all the positions that I have open. And this system I had set up to do some robotic trading. And what I want to do is I want to free up my buying power. Before I really talk about getting into new positions, I'm looking and I see I've got a working capital on this simulated account of, it's around 130,000. That's a significant amount of working capital on this account. And so in order to free this up and increase my buying power, I'm just going to liquidate these positions. I have my robotic trading disabled, so it's not going to put new positions on. And if I hit this exit all button, it's going to exit all of these immediately at market. So I'm freeing up all of this capital, and some of these orders are working, right? So RTN has got a order that's working against the paper money right now, and obviously this is a little less frequently traded. But what I just did was I freed up a lot of buying power. And so now I have $177,000 of buying power in this paper money account, and I have some room to play with. That's actually the most important thing to consider, by the way. If you're trying to automate strategies, you need to make sure that there's sufficient buying power that matches your risk parameter settings. So in other words, Prodigio has governors inside of it so that if the account does not have enough free buying power to get into a robotic position, it won't send the order. You also have other protective stops as well. In the event that you would somehow manage to trick the system into doing this, that order gets rejected anyway at the broker. So you kind of have these multiple layers of protection related to the robotic trading. But we want to get into new positions, right? The idea is we have a semi-automated system with signals being generated, and as the signals come in, we want to monitor them and we want to get favorable fills. So here, I'm running several kind of very simplistic strategies, and I got a short signal on target. Now you don't have to worry about these strategies. These were built a while ago. They're very active strategies are here just to demonstrate the system working and scanning, and when you get a real-time signal, how it appears in TradeOptics. I clicked the Trade Now button, and that gave me the short signal on my chart, and it said, according to my Wizard Lab strategy, it's time to consider a short signal on this stock. And again, this strategy, it's very simplistic, right? So this is not a suggestion for a trading idea here. And the idea is, let's suppose that we wanted to go short on target. Perhaps this is, the name of this strategy is called Upper Bollinger Band with RSI Short. So this is looking at some kind of very rudimentary combination of an RSI and a Bollinger Band. And I can really tell just by eyeing this up that price kind of must have hit the upper end of a Bollinger Band, and the RSI must have also indicated perhaps it was overbought. And in that case, perhaps you're looking for a reversal. So when I'm watching this symbol target, you'll notice that I've got the bid and the ask here. Right, so I've got 48.86 by 48.87. And this bid and ask really represents the NBBO. Right, an NBBO, as many of you know, that's an acronym for the National Best Bid and Offer. But what's really interesting about NBBO is how it's broken down. So I want to consider this for a minute. A lot of you guys know what NBBO is, and especially if you're an active trader. If you're not an active trader, you may not be as familiar with the NBBO. But the concept is actually pretty simple. When we do online trading, all of these exchanges are kind of wired together. It's literally networked together. And there's this massive infrastructure and all the exchanges, you're talking about the NASDAQ, the NYSE, the Chicago Board, all of these are kind of linked together. And all of the different exchanges have different books, and they have different market makers that run those books, and some exchanges such as the NASDAQ are fully automated, etc. But you basically have all of these microcosms of trading activity. And what happens is you have situations where different exchanges, they'll have different discrepancies based on who is placing orders at different times. And this really manifests itself when you look at level 2 views. A level 2 view says, I understand that the market is composed of all these different exchanges. And at each exchange, there's different levels of interest from different, you want to call them parties, right? It's not necessarily individuals, it's brokers that represent those individuals, etc. And these interested parties submit orders, and they order change depending on the state of the market. And what happens is, because this is all kind of linked and hardwired together, the exchanges work in unison with each other. And what that means is that no matter where you're coming from, you can always, via the, this internet and this infrastructure that everyone has set up, you can always trade against what's known as the NBBO, which is the National Best Bid and Offer. Bid is the highest price that someone is willing to purchase the stock for at this time, and you see it just changed. It went from 85 cents to 84. And offer, also known as the ask, is the lowest price that someone is willing to either sell or get into short position for. And you can really, when you think about this, you can think about short positions as really being the same thing as a sell. I mean, they're not the same thing, but you can think of it as being the same in this context. So you have this market where you have a best bid and a best offer. And these two prices, the national best bid and best offer, they don't really ever cross. It depends on how you look at this data. Sometimes it can cross, but really the idea is that in a national best bid and offer market, the market is moving, and you can't. There's no way to, for the layman to make money based on plain arbitrage, right? And if some of you are coming from a financial background, you may have studied kind of economics and this kind of thing, and you understand what arbitrage is. That's when you have a discrepancy in markets and you act as a middleman. And it's like if you have two countries, if you have the United States and Canada, if you can buy something for a very low price in the United States and sell it in Canada for a very high price, you make the money on the profit because you're acting as a middleman, and that process is a form of arbitrage. It's really when you're profiting based on discrepancies, and it's all driven by supply and demand. There's a lot of theoretical stuff you can get into, but that's the idea behind an arbitrage. Well, in an NBBO market, you're kind of wiring everything together, and it kind of eliminates that arbitrage, but there's a lot of advantages to doing this. The advantages are that you can create a system. See, one of the reasons why arbitrage works is because of time. And so if you buy goods in the United States, if you have to ship those goods to Canada, that could take a week. And so really what you're doing is you're doing time management, like the time value of money. And because the infrastructure is it's lit, it's hardwired, because it's instantaneous, it kind of eliminates the possibility for arbitrage. But what that means is that you can trade at lightning speed. So there's a big advantage, because you can take your idea and you can kind of play the momentum swings in the market, or you can watch the market, find your price, and execute at that price immediately. And that's what we're going to discuss, how to find that price and execute at that price immediately. So NBBO represents, across all these exchanges, the highest bid and the lowest ask. And of course, if I put a limit order out here, so let's say I want to, and I kind of like to think in terms of positives, right? You know how your English teachers taught you don't talk in double negatives, right? Did I just do it? No. Like, don't not talk in positives, right? That's, wow. That's really confusing. There's good reason for it. I believe that it's much easier to think in terms of positives. And you might agree, you might disagree, but whenever I give these examples, I always start with the buy side and go over to the sell side. So if I want to buy, right, I want to buy on the cheap, right? I would love to be able to buy Target for $40 a share right now and sell it to you for $50 a share. Yeah, that'd be very good for me, but that's not going to happen. But I can take advantage of the market convention known as a limit order in order to kind of reserve my place in line. So I'm really saying, if the bid is at 48.82, if I have a desired price, and let me say I want to buy this stock, and I know I started with a short signal, but I'm going to flip around to the other side. Let's say I want to buy, for whatever reason, Target here, and I put my order price down to 80 cents, so it's 2 cents under the bid, right? It's an order buy 100 shares of Target at 48.80, 2 cents under the bid, at limit, and it's a day order. If I send this order, you notice that my order status tells me that order is working, right? What that means is I am on the book somewhere, right? And I don't really know the details of where exactly this is, and there's all kinds of stuff that gets hung up in the middle with all the brokers and stuff. So all I know is that that order is out there, and that if you, for example, put your order on TOS, the order is handled well, that I don't even have to concern myself with these things. The fills in the TOS environment are so impressive. I've actually watched them get better over the years. So it's actually improved dramatically since maybe 10 years ago or something like that, to the point where in the past maybe you had to be concerned with more things than you do now. And it's not just TOS, it's kind of the state of the market. It's so fast that I don't have to really worry anymore. I know that my order is working on the books at a limit order of 48.80. And if this NBBO dips down to 48.80, I'm going to get a fill almost immediately, especially on a stock like Target, where it's not the most actively traded stock in the world. But it is an active stock, right? So in the past, I'm looking at a 5-minute chart. In the past 5 minutes, the volume of this was 27.1 thousand shares, right? It's not the most active in the world, but it's active enough that I get these beautiful looking candlesticks on my chart. An inactive chart will obviously look something like, this is the one that I am always impressed with. Here's our good friend Berkshire Hathaway. It doesn't trade a lot, but the price is really, really large. This is kind of an inactively traded stock, unless big blocks are moving. But the point is that when I look at Target, I have kind of like a live market. Right, so my working order is on those books. It's 2 cents under the bid. And we're actually going to take advantage of the book here to get our favorable fill prices. So this is an example of where I have a working order to buy at 80 cents under the bid. Well, let's go 2 cents over the ask to sell. Right? And now I'm not in position here, right? But what this would do is it would put a limit order out there that if it triggered, I would be in a short position. Right? So let's do that flip side. And so I want to put my order price at 85 cents. I'm going to send that out. And you see what I'm doing here? I'm creating kind of a bracket around the trading activity. And I can zoom in. Right? And you see this almost doji-like candlestick, right? That's bound building the current 5-minute bar. I've kind of bracketed some orders around the current range of trading activity. I've got a working order, sell 100 shares at 85 cents, a working order to buy 100 shares at 80 cents. And these orders are out there working, and if they trigger, they're going to fill immediately. And what's so interesting is that this is kind of like a buffer that you can use to your advantage. For example, if I had set a robotic strategy to trade this system using market orders, a market order has the advantage that it's going to get in the position right now. It's not going to wait, but it's going to go in at the NBBO. Your fill long right now is going to cross market, and if you did a market order to buy, it will fill at 83 cents. If you do it to sell, it's going to fill at 82 cents on the NBBO bid. That's because there's size, and it depends on size too. These are 100 share blocks. I may not be able to purchase, say, 100,000 shares at 83 cents right now because the ask size is this is actually 1,500 shares. It's a block size. But I have the orders out there working, and it's creating kind of like a tolerance for me. And what this means is I got my signal, I got my trading idea, and I'm working the book. I'm working the market for my trade opportunity. And it doesn't matter if I want to go long or if I want to go short. You would want to do whatever you want to do in this situation. If I want to buy it, I want to put a price that's favorable to me. If I want to sell it, I want a price that's favorable to me. But you can set up limit orders triggered from an automated strategy which are kind of away from market, so that in the probabilistic event that it occurs, and this is all based on probability, right? If it hits, I'm going to get a favorable fill, and that automatically adds to my profitability potential, right? It compensates for commissions, it compensates for slippage because I'm really denying any kind of slippage. And I mean, slippage is when, let's say, you put a market order in and it executes at a price which is kind of away from what you originally intended to do. Slippage used to be, as I was saying, a much more significant factor. Now it's much less because of the efficiency of the markets has improved so much. But you still can have slippage, and on a stock like Target, you can still have pennies of slippage. But by putting a limit order in, it allows you to work the book. Show you, and I want to kind of the concepts of how you can use this using Prodigio or an automated strategy. So this is the idea, right? I just really showed you the idea, and a lot of you already know this. This is old hat to the active traders. If you're coming in from kind of web-based trading, this made sense, so I wanted to make sure I had everybody in on the same page. And now you see this candlestick, you see the bid going down to that, that 80, right? If this ask goes down one more penny, my limit order here is going to buy, right? So let's say I'm working this order, and let's focus again on the buy side because the price is down there. I right-click here. I'm canceling that order at the top. Let's focus on the one down here. Now what happened is, you see how that turned from a yellow line to a white dashed line. Price dipped down, and I got my fill, right? Now this is good if I want to do a long position. Now if I look at this stock, right, I can make generalizations about anything. I could speculate all day long, and that's not really what we're interested in. We're interested in the technique, so don't worry about the speculations here. But if I were speculating that, or if I had reason to believe that target is going to end in the next 4 hours of trading much higher than it is right now, this would be a very good fill price, right? Because look at the difference. If I expect the price of target to go to $49, if I went long at $48.80, that would be a 20-cent profit at the end of the day. And of course, you know, if I expect 20 cents profit, you know, I hope I get 30, I hope I get 40, you know, etc. If I had gone in at my original signal, it would have filled to go long somewhere around here. Now again, this is a short signal, but if I got a long signal and I wanted to go long, my fill price would be somewhere around the high of this bar. That's $48.90 in this case, or it's oh, actually it is the same price. I'm looking at these candles wrong. The difference between $48.90 and $48.80 can be huge depending on your trading strategy, and you can work this concept into your trading strategy. If I am trying to acquire, I can put limit orders away from the market so that in the event that they trigger, I am accumulating the stock. And this is really where the strategy comes in. So you see, like, this price is definitely moving down since I began discussing this. Interested, but let's say I was acquiring it. If I put limit orders to buy, I can stack them, and this is the strategy, right? So right now my bid is at 78, and I'm going to see if I can get this stock for 76 cents. Right? So I put a limit order in there, but now I can put another one in 2 cents below, and I'm stacking them. And the idea here is that I'm really altering, I'm modifying my risk. Right? I'm modifying my risk here because in the event that the price dips all the way down here, I would then be long 400 shares, right? So there's, you know, 1, 2, 3 orders in there. All right, let's zoom here. There's 1, 2, 3 working orders. I'm long right now in this position. Average fill 100 shares long. And if the price dipped all the way down here, I would be long 400 shares. And I'm really changing my risk because if I were speculating that the price of the stock is going to grow, that it's going to go up, in the rare chance that price movement oscillates all the way back down here, I'm maximizing my profit potential. Right? Now remember, this is a balancing act. You have to make sure that you want to acquire this stock. When I did this, you know, maybe I could be swing trading, right? And I could be looking at the dailies. And if I'm looking at the dailies, maybe I expect that based on this gap down, there's going to be a recovery. And if I were doing that, I would want to create an intraday based trading strategy which accommodates my swing trading idea. Right? So given this, let's go back down to that 5-minute chart. And here, you see what happened? Price dipped down and my second order filled. So now I'm long 200 shares because price rebounded into this 200. And the concept here is I'm acquiring. I am looking at my long-term based strategy and I'm accumulating stock based on my working of the order book. And the reason why you do this is because it's impossible. It is literally impossible to pick the highs and the lows. I mean, yeah, you might get lucky and you might look back in hindsight, which is 2020, and you might say, oh, well, that happened because, you know, this pivot value was exactly here at this time, and that was the exact price it was going to go. Well, I don't believe in that. I don't believe that you can pick the highs and the lows. I don't believe you can do that every single time. I think you can get close, but I don't think that you can perfectly play the market so that you are the winner 100% of the time. I just don't believe in that. In light of that, I can adjust my risk, because what I can say is I believe that I can play the markets, invest more than that I can. Right? I don't think that's asking too much of myself to say that I can do wise investments, or I can react intelligently and not overreact and try to work my strategy according to the broad scheme. If I can do that, I can take advantage of these little techniques. And if my goal is to acquire, right? And of course, if I was going to liquidate or short, I could take the opposite side of this. I could be working the other side of the book. I'm really working the bid side right now. If my goal is to acquire, I can place these orders either manually using ChartTrader Pro or algorithmically, it means robotically, using Wizard Lab and the Strategy Builder, so that I could place these away from the market in a way that makes sense. Now, one quick thing I want to show you really quick is just the mechanics of this. So you see what happened here? That other order filled at 300 shares. And then if I'm watching this in the day, I might want to think twice about this, because this might be reversing. I could just grab this on ChartTrader Pro, and if I say yes there, I actually moved my order away so that this went down to, this is actually at 64 cents now. And I can right click and I can cancel it. You can move these orders around on ChartTrader Pro very easily like that. You want to be careful though, because if you put a limit order over here, and I can do this because this is just a paper money, see how I have a limit order to buy. If I cross over the market, right, which the market's defined by the NBBO, and also the last price is very indicative of where the market is at. If I cross the market, that's going to fill immediately, and you can see that kind of work, and it immediately filled. Now what's nice is that if you go across the market, there are protections built in so that you don't get filled at, say, way up here at 48.90. It will always kind of peg to the NBBO, which is kind of nice. That is one tool that while you will come in, and if you load it, and if you're working the position, you can just drop that order right on side. So here I did get a legitimate buy signal. I can just drop that in. I can just kind of place it, and I can really do this all day long. I can see how fast I'm just throwing these orders in and just managing them. That's very useful if you're going to work those orders that way. But you also have this nifty little lock widget, and this shows up a lot actually in a lot of different components. This locking widget, you see how when I click it, it changes the lock, it gets released, and then when I click it, it locks down. That's pegging to the NBBO here. When I have it unlocked, this order price, if it's on the buy side, it's going to follow the ask. And if I leave that unlocked, when I'm ready to react to it, I can kind of spin up or spin down very quickly. And when I do that, the act of spinning it is going to lock it in place so that it's not fighting you. And really, this is just the general concept. This is a user interface concept. When it locks in place, it's kind of set, and you can manually tweak it, just like that. And I can unlock it, and when I unlock it, it's going to peg to the NBBO. See how it's at 43 now? Just changed. Maybe this will change again. Right, 43. Hopefully it'll change soon. But this lock, you can actually really take advantage of this here to really send your order in rapidly. So those are two little tricks there for kind of manually working this book, right? And so the idea is you would create a TradeOptics strategy, your signals come in, and when you want to work this order, right, you load your TradeOptics, and then you either put the symbols in manually. There's one more trick that I want to show you here. You can actually do auto sends, right? So there's a feature up here called auto send, right? Are you sure you want to enter auto send mode? I say yes. My cursor turns green so that it's active right now. This chart is active. When I click, that's going to send an order, right? So you want to make sure you understand this. That's why it gives you a prompt, and it says, okay, you're entering auto send mode. You want to do this? And you say, yeah, I want to do this, because watch how cool this is. If I want to buy, at 100 shares of this Qualcomm right here, I can say go in at limit, and I can click here, and it put my order there. So I can actually I can do that, which is pretty cool. Now remember, it's every click puts the new order on here, right? So if I'm done auto sending, I want to take it off, and it puts my cursor back to white, and now I can do things like change the orders, right? And I can say cancel it, right? Or I could cancel this one, right? Remember, I can't drag this when I'm auto sending, because if I'm auto sending, I have to click here to drag it. It's going to send another order, right? So just make sure that you understand that. Try it in paper money, but once you use it, it's pretty cool. It's pretty cool, especially if you want to really rapidly place your orders in there. So let's take these off. But this is the concept of kind of working the book. It's that you want to give yourself a buffer so that in the event that price oscillates down there, you can get favorable fills. And why am I talking about this at all? Well, let's take a look at our good friend Bollinger Bands. Right? This should give you another level of understanding of this. A Bollinger Band, I talk about this a lot, a whole heck of a lot actually. It really gives you a trading range. And this trading range is based on volatility. It's based on variance. Variance comes from simple probability and statistics. You can think of it as an average volatility. That's really what it is. And the way Bollinger Bands works, especially if I do shift up and shift down, is they give you kind of a rule of thumb as to where the trading activity is. And by default, when you look at Bollinger Bands, really the offset is 2. If I change this to 1, it gives me a much tighter band. And I want to explain why this band is tight when it's at 1 degree of offset. The 1 stands for the number of standard deviations. And the nice thing about markets and the fight between the bulls and the bears is that when you look at small time frames, such as when you're working the book, the behavior tends to be more random than if you look at things on the long term. Right? So consider this. I'm looking at this Qualcomm 5-minute chart, and you see the range of trading activity. It kind of looks sideways. If I just look at the last, say, 2 hours of trading, it's kind of going sideways. I mean, there's certainly small trends in it, but that picture completely changes if I go out to the dailies. If I go out to the dailies, I clearly see trends here. And yeah, there are periods of consolidation, but I clearly have an uptrend here. Right? Really, anyone can tell you that this is in an uptrend. And what happens is you see this price movement. I've actually got the same study applied to these daily charts. The price doesn't bounce off of the walls of the Bollinger Band range as much when I have these trends. I mean, it still happens, but you see how it just kind of it comes down below and it kind of breaks through it? If I go back to my 5-minute chart, you'll see that it's bouncing around these walls of the range much more. Like, look at how many times it zigzags around these ranges. The reason for that is based on, pure mathematics. Because the nature of the data is kind of more random, because there's less trend, the data is distributed normally. Pure mathematics I'm talking about here. A normal distribution is the bell curve. And you'll read articles, especially if you actively read about this stuff, that the market does not behave according to a bell curve. It's not normal. And that's completely true. But during certain periods or certain time frames, the data does kind of fall in line with this bell curve distribution. And what I mean by a bell curve is that it just bounces around its mean value. That's how a bell curve works. If you look at the bell curve, it looks like a bell, right? And the reason why it looks like a bell is because the fattest part is in the middle, and that's tied with the average. And if you get away from that average, that's where the bell shape comes in. Less and less stuff is so far away from the average. And in a Bollinger Band, you're really just looking at the bell curve. You're looking at this middle part is like the fat part of the bell, and these bands around it Well, those are just classifications of the bell curve. If it's set at 1, that's known as 1 standard deviation away from the bell curve. And what that means is it's when you have a perfect bell curve, which you don't, you never have a perfect bell curve in the market. But when you do, 66.7% of all of the price, the trades, literally the trades, happen within 1 standard deviation. 95% of all the trades happen within 2 standard deviations, and 99.7, almost all of them, happen within 3 standard deviations. Now again, this is on a perfect theoretical bell curve, which doesn't exist, but you can see it tends to happen. And because it kind of does happen, you can take advantage of that. And so when you're working a book in order to get favorable limit order fills, remember the limit orders come out here, right? I put auto send on. If I put limit orders, let's say to buy at the bottom of the Bollinger Band, there's a fair chance if I want to acquire this stock, and make a profit that, say, recovers its gap up or whatever, there's a fair chance that this price is going to bounce off of this. And this might happen in an hour. It's not going to happen immediately. That might happen in an hour, because the lower Bollinger Band was back here. This was 35 minutes ago when this low price hit. But if you had your limit order set up, you could have been the person who got this fill. I mean, somebody got that fill, right? And that's a beautiful fill, because what happened is it immediately bounced back up. Somebody did get this fill, and somebody got this fill. And the point is, depending on your trading strategy, if you want to get that fill, you can be kind of working the book, sitting out there on the market. Now, this is paper money. I'm not really influencing anyone in paper money, because this is it's a simulated fill. It's not a real fill in paper money. But if you're in live money and you put your limit order out there, you are influencing the system so that people who are making decisions and other people who are trading with you, and I always say trading with you, never against you. I don't believe in the concept of trading against you. I don't believe in the idea of there being a winner and a loser in a market. And the reason, and you should think about this, the reason is because there's a time value associated with money. Just like that example of arbitrage in the United States and Canada, just because you buy it at a low price in the United States and sell it at a high price in Canada doesn't mean that there was a loser in that deal. It doesn't mean the person in Canada lost, because perhaps it's good relative to that market, and perhaps it's just too costly for competing markets in Canada to transport to the United States. That's why there's imports and exports. Everything kind of runs around in circles. So I don't believe in this concept of a winner and a loser in the market, right? And this if you really get into this, this goes against some of the game theory that's out there, which is why I don't necessarily believe that's the best way to look at it, although there's a lot of advantages to looking at it that way. So you got to, what's the bottom line here? You got to take all of this with a grain of salt, and you got to tie it into your individual trading strategy. You got to take these ideas. You got to realize that these are not holy grail trading strategies that are going to tell you how to make $1 million tomorrow, right? Don't believe in those guys that tell you that, right? Be your own boss and use your own trading strategy, and take these concepts and incorporate them into your trading strategy. And as I was, on my little rant there, what was happening was, you see Qualcomm, it's kind of reverting back to its lower Bollinger Band. And I'm still kind of 6 cents away, or maybe 5 cents away. But you see that this trade activity, and maybe that, wonderful little speech influenced the market to come back in that direction. That's kind of a lame joke, actually. But anyway, what's happening in that book, and in the event that this price comes back here, I'm going to get filled, and I could be the low price on that fill. Now, you have to be reasonable about this, right? If you're more interested in getting the fill than getting the price, right? Because there's a time value associated with money, I might want to bump this up. And if I bump that up, I'm increasing the probability that it will fill, but I'm sacrificing some of the profit potential. It's a trade-off. So this balance is what your trading strategy should be based on. And now the final thing that I want to show you here is how you can set this up to be automated, right? So you can kind of disperse an array of orders, right, using the robotics. And I guess I'll kind of get back to the book, and maybe I'll just talk a little bit more specifically about how level 2 works. But I want to do a little aside here about in Wizard Lab what you actually do to set up the system to place, say, 3 orders that are staggered. Right, so let's take a look at Wizard Lab really quick. Now in Wizard Lab I mentioned you create rules, and these rules, and I definitely recommend you check out the video archive on prodigiorts.net to see how you use this system, how to build some of these rules. But there's a lot of stuff out there already that you can really just pull right in and start using right away. Step 2 is when you take those rules, and again those rules are generating signals, you take those rules and you combine them in a way that generates signals. And the motivation for Prodigio is for trading. So everything is oriented in a robotic trading context. But the idea is you kind of take rules, you drag them out, and because I'm working with a limited amount of real estate, I want to show you how this is set up from top to bottom. The idea behind a strategy in Prodigio is that you have a scanning rule, and when you deploy a strategy, it deploys all the rules that are wrapped up into the strategy all at the same time. So you deploy a scanning rule, and this scanning rule, it's working, it's acting on the data feeds, it's processing technical analysis calculations, and it's doing all of its logic. And when the logic triggers, it fires a signal. And when this scan rule, which is your primary rule, that's your number one, it triggers, it's going to do something. And that something, if it's TradeOptics, it's just going to send a signal in here and be done. It's going to be done. But if you're RTS trading, that's robotic trading system trading, this is going to automatically manage your account. And of course you've got your risk parameter settings, and I'm not going to go into detail here, but you can click here and that will enable the account to trade robotically. And anything, like I have this rule, what it does, if I had written a description for the strategy, it would tell me right in here. That gives you an opportunity to put an order out, and that could be a limit order that's working the book to get into the position, but I could also kind of do this strategy where I work the book, and I want to show you how to do that. Let's say I have a rule, and I'm looking at something called BB System Up, which it doesn't matter what this is. This is really just an example strategy with an example rule in it. But I can say my first parameters if I want to go buy or sell. Right? So I'm kind of, I have limited real estate. I'm getting the ellipses here. That's because I have very limited real estate for the broadcast here. But I can say if I want this to be buy-oriented or sell-oriented, I really just flip these two. And the second parameter is what kind of order you want to go in at. And we discussed market orders, but we kind of focused on limit orders today. And so let's take a look at specifically how you work the order using a robotic system. Here you have the order expiration type, which is really just a day order or a GTC order. Day is going to expire the order at the end of the day. That means at the end of the trading session, this order, if it did not fill, will be canceled automatically. GTC is going to let that work indefinitely. So it depends on your trading strategy. If you're going to do a day-based trade, you want the day type. If you're going to do a swing-based trade over multiple days, you want GTC. So the idea here is that based on this order, what I can manipulate in the order parameters gets activated. And a limit order has to be sent in relative to the current state of the market. That's why we have this last bid and ask here. And so for example, if I want to work the book, right, we looked at our example, and I've still got my order entry up here for Qualcomm. I've still got my spread here. We call it the spread, the difference between the bid and the offer. And if the book right now is at 55.67 on the bid size, if I want to go 2 cents under the bid to kind of work my order like I was doing, to go 2 cents under whatever the bid is at the time of the signal. And the problem is you don't know what that price is when you're building the strategy. A couple reasons. Number one, you're building it today and you're going to deploy it either later today, or you're going to deploy it tomorrow, or you're going to deploy it next week. And another concern is that Qualcomm is trading at a completely different price level than Google is, right? Google's at like 500, Qualcomm's at 55. And again, the price of something is, there's so many factors behind why it's priced that it's not even worth talking about. But the point is they do trade at different price levels. And since this is kind of like an automated robotic system, I want to create what's kind of like a conceptual strategy. I'm really building the concept to say, when I get a signal, I want to put the order in 2 cents under the bid, because that's what I want to do. I want to work the book. I don't need to know that order would be 55.66 right now. I don't need to know that to build the strategy. So if I choose bid, that's going to start with the bid price, and if I choose an offset of 2 cents under, see it's -2, that will put a limit order to buy 2 cents under the bid price, just like I was describing. And because sometimes it's hard to think about things in terms of offsets, we built this example panel in here. And what this does is it says, well, all right, let's say you have a stock like Qualcomm that's trading at $50, right? Qualcomm's at 55, almost 56 right now, but here, our example, we just have it set to 50 because we think of that as an easy number to think about. So in the event that that happens, right, it gives you an example bid and an example ask. The example bid is at $49.98 and the example ask is at $50.02. So we picked a spread to be fairly wide so that you could understand how the order would work based on the offsets. And watch what happens here. If I choose bid, and if I choose -2, that's going to take bid, which is $49.98, and it's going to subtract 2 cents. So I get a limit order to buy at $49.96. And this is active. So watch what happens. If I spin this back to 0, you see this change dynamically. That goes back to the bid price. And if I spin this up, that'll put the order 1 cent over the bid. If I spin it up, 2 cents over the bid, 3 cents, 4 cents, 5 cents, 10 cents over the bid, right? And then if I go down, 10 cents under the bid. This will change to $49.88, 10 cents under the bid. If I change this to ask, right? Now what happens is it's tied to the ask price. 10 cents under the ask. Well, the ask is $50.02 in this example, and the order to buy would be placed at $49.92. And I can spin this in any direction that I want. And of course this changes. See how I have an offset of 0 here? Depending on whether I'm looking at the last, right, which was $50.00, that was the trigger price, the bid, which was $49.98, or the ask. And I can put these orders in at any offset relative to those. You can also do it by a percentage base, and that's pretty useful because 2 cents means something completely different on Google than it does on Qualcomm. 2 cents is much more significant on Qualcomm than on Google. On Google, it's almost insignificant. So when you work these, you can do things like do a 0.1% offset, and at $50, a 0.1% offset, it's was that a half cent? Anyway, you don't really even have to think about it because it shows you the example. If I did, let's say, well, here we go, 0.15% offset below the bid, that's putting it at 7 cents under the bid. And by using a percent, it will be relative to the price threshold. That's why whenever I build these strategies, I always use the percentage one. But you can certainly create a strategy in Prodigio which only trades one symbol. So you could focus on, say, an ETF, right? We talked about volume before. ETFs are great for scalping type of strategies because the volume is so high that you can work the book easier on an ETF than you can, say, obviously a Berkshire Hathaway. Is much. I don't know if it's possible to work. My pockets don't run that deep to work the book on Berkshire, but it's an interesting discussion, nevertheless. So by doing this, right, and I just wanted to make the example simple, right? Let's put this back to 2 cents under the bid. What this will do is it will put my initial limit order to go in according to my settings, my quantity settings based on the robotic system. That would automatically place my limit order in. And now what if I want to do the tiered system that I was discussing before to work the book and trade off probability versus price profit potential? Well, what I can do is I can use this management add to position. Right? And now here's a good time to actually talk about this. Usually when I talk about how to work with Wizard Lab, I introduce you to the management close position, because here you can make a rule like close at the end of the day, right? That's going to liquidate at the end of the day, or close based on a Bollinger Band retracement, etc. Those management rules are concerned with getting out of the position. But if I go here to my management window, I can drag an order into add to position, and this is what I can do. These add to position rules are going to kick in an RTS strategy as soon as the position enters. Right, now that's different than when the signal happens. It will come in when it goes long, in this case, or it goes short if I had picked sell. What this will do, add to position, it's the same direction. It's the long position, so this is kind of locked into buy. And if I pick the same parameters, limit GTC, I can put in a second order. And if I have 2 cents under the bid, like I have in this example, if I choose 4 cents, right, now actually this is going to be tied to the entry, but I can pick 4 cents under the entry, or 2 cents, let's do 2 cents under the entry, so that if the price gets in at this bid price at $49.96, it's immediately going to place an order to buy 100 more shares at $49.94, which is 2 cents underneath the entry price. And I can stack these. Right? So for example, I can go in here and I can place another one at 4 cents under the entry. And what this would do is it would, as soon as it got long, it would immediately place 2 more orders to get in. And this is a percentage base of position, so you want to kind of adjust this as it's appropriate. But it's immediately going to get into more position based on the order entry price of these limit orders. So this one would be a long order to buy 2 cents under, $49.94. This one would be a long order to buy, this one would be a long order to buy at $49.92. And that's how you can do that. But the point is, this strategy is quite simply working the book, right? And you look for fills according to the foundation of your strategy. And one last thing is just some notes about what level 2 is. When you see level 2 displays, right, what that does is it presents to you a deeper view of the book. Right? So when you're just looking at level 1, 59 by 60, you're just looking at the top of the book. But there's more market makers on that market. You know, if I put my limit order out here, right, to buy under the bid, that order exists in some context on the books. And a level 2 simply classifies, according to the exchange, what orders are on what books. And it lets you see kind of how much interest is in here at 55.50, etc. You can incorporate this into your trading strategy. And this is kind of a lead-in to the build that we're working on, which has kind of level 2 views. It allows you to kind of work the book using this system and to kind of spot where the interest is. And it's kind of interesting because if you see a lot of size at this price threshold 55.50, it gives you another view of what's happening behind the scenes. And you can start to see things. If you study the level 2 book, you can start to see people who kind of are working block trades, or like a block trade goes off under a big hedge fund when they need to kind of reinvest and they need to move assets around, and a large hedge fund might need to liquidate, let's say, 2 million shares of one stock and acquire, let's say, 500,000 shares of another stock. They have to work these blocks, and of course they're a hedge fund. They want to get favorable fills just like we're doing here, and so they're going to kind of work the book in a similar fashion. And when you look at these level 2 views, sometimes you can see that kind of activity, and you can incorporate this into your strategy. So I'm going to wrap up today's presentation by saying I hope that gives you some things to think about in terms of working the book, level 2, how you can look at level 2s, how you can use, say, Prodigio to use the auto send and some of the order readjustment features in order to shift limit orders around. Hope it gives you some ideas, and I hope everyone enjoyed this presentation. I'm going to wrap up by saying, as always, my name is Brian Wagner. I'm the Chief Architect of Prodigio. And join us here every week, every Wednesday, 12 Eastern, 11 Central, and join us on the web, www.prodigiorts.net. We have some new and exciting features to discuss in upcoming chats, so you can look forward to seeing that. And as always, send your activation requests into support@thinkorswim.com, twitter.com/wizardlab. You can follow us. And join us here during the week in the chat room to ask questions and talk about strategies. Okay, thanks guys. I hope that was an enjoyable little perspective. And again, take the ideas, incorporate them into your own trading strategy, and be your own boss, be your own trader. That said, I'm going to sign off, and I'll see you all next week. Take care and great trading.